In the past weeks, we've noticed that the market has been changing. Like the place that we have been using past couple of weeks didn't have any follow through anymore. Right now, in this past week, we can see that the market is kind of having a choppy move. So it can gap up overnight or gap down overnight. And in my opinion, it's not really the best time to do swing trades. But if you plan in doing so, I believe it's best to use small size, or even better, you can use this time to study. Just watch from the sidelines and study. And in this video, I'll highlight two trades which I believe can provide value to anyone watching. What's happening, traders? I post videos related to trading. So if you're new here, please like and hit subscribe. So we'll start with the positions that I exited. It's been a fairly good week for me. I made up all my losses last week in just one trade. So first, I'll discuss this 3.3 hour loss. It was because I tweaked the platform that I was using and I forgot to change the default, which is entirely my fault. But as much as I didn't want to, I cut the loss even if it was more than what I anticipated, because I oversized. I didn't really notice it until it was kind of late. But the lesson here is it might sting. Getting losers bigger than what it should be, it might sting, but I assure you that in the long run, if you want to make it in this business or in this game, whatever you might call it, you need to cut those losers fast, and it's not gonna be as bad as you think it would be. Then the next trade that I'll be highlighting here is Apple option trades. So if you're not familiar with options, these fields are multiplied by 100 since one option is equal to 100 shares. So the trade here is based on the general market. It started with the SPY. As you can see, this level which I've drawn is a key level. When you see a price being tested multiple times, may it be a support or may it be resistance, but it gets tested multiple times. So you can draw a line there. And as you can see here, this 389 level has been holding the SPY in recent days. And when it opened Monday, it gapped down. It went down, and those people which bought stocks that have been expecting the 389 to hold. So what do they most likely do? At the open, they would most likely be panicking. We have this idea from the general market. Then going into the Apple stock, this closely correlates with the market, so then it also gaps down, and as most of the stocks, I was looking for this to have a continuation going down. So I went in with the idea that people are gonna be selling, people are gonna be panicking, and as you can see, this had a downward momentum going into Monday. Then came Monday. This was Monday. It eventually went up, and actually we want the stock to go up if we are looking for it to go down. It might be counterintuitive, but that's the best thing that could happen to us, since we can have a better entry and we can see if that is really sustainable. And if it's not, then we look for our entry. So I went in here partially in this first bounce. It bounced, then out. When it went down, I entered 1/3 of a position, then it went up again. So I didn't like that, though. I was expecting this to go down, but as long as this high of day doesn't break, I'm fairly confident with the trade. So I entered here when I saw that the stock was having a hard time breaking that 129 level, and then entered full size with the risk just above that. Then it went down. I covered about half low of day, around 128, and then held some afterwards for the next day, and I sold most at 120. This went very fast, so I couldn't really take my position there while it was going down. So I exited this when I saw that it will not go down anymore, and you might notice a spike in the volume while it was selling off. Most of the time, you can expect this to bounce back, because if there's a lot of people selling in one particular time, who's gonna sell anymore? There's no one who's gonna be selling their shares. You can expect this stock to bounce back. So when I exited this at around 120, I then entered a call, which is I'm betting that the stock will go up. So I went on the opposite side of the trade and held it overnight. And on the next day, I saw that it didn't have the momentum that I wanted, so I exited that trade just for a small win. So I don't have any positions going into Monday as a swing trade based on the reasons that I said before. These stocks in my watch list are just gonna be everyday reassessment based on what the market will do. So Tilray, trade thesis here is cannabis sector bill coming up later this year. Fubo, trade thesis here is if this breaks this downtrend line, signaling that the downward pressure, the selling pressure is now alleviated and possibly a balance, and will most likely be a trade for the upside few weeks or few months. QS idea here is this is a very strong stock. I can see I'm always watching this stock every day, and I can see the relative strength of this stock. And if the market decides to go, or if the market decides to go sideways, then I believe this stock will be strong enough to have a good trade. Saba, the same with QS. But this one is having a sideways or a consolidation type of move, but I can see relative strength in this, so we'll be watching this for a possible entry coming days or weeks. PUBM, this is the new one in my watch for next week. I'm looking at this sector, software application technology sector. I've been saying this in the past couple of days while I scan for stocks during market close. I'm seeing stocks in this sector going up, and especially PUBM. This has earnings, which is very good, positive earnings and recent earnings, so that can be the catalyst. And then this has a around 30% short float. I'm not sure if that's still the same. And this only has about 5 million float, which is a very good thing if we want this to go higher and go fast. So that's it for this week, and I hope you get value in this video, and if you do, please like and subscribe. See you on the next one.